Dear current shareholders, prospective investors, analysts, press, and MAIB colleagues, thank you for joining us today. We are pleased to present to you the financial results call for the third quarter and the first 9 months of 2023. Mandatory disclaimer, these results are based on consolidated and audited financial statements of MAIB Group. The forward-looking statements in today's presentation are based on our best estimates and are not intended to be taken as a promise of future performance. Today on the call, we have Giorgi Shagidze, the CEO, and Makar Stoyanov, the CFO of MAIB, and I work in investor relations at MAIB. Giorgi will start with a brief summary of MAIB's performance during this quarter.
Good afternoon, everyone, and thanks for joining our Q3 results call. From the perspective of the summary, and then we will go through the details of each of the points. Moldovan GDP decreased by 2.2% in second quarter, resulting in the decrease of 2.3% for the first half of the year. However, the forecast for 2023 remains positive, with the second half growth, so that the entire year growth will be 1.2%. We had a very good development in inflation rate, which decreased rapidly to 6.3% in October 2023. And aligned with this, our base rate right now stands at 4.75%, which will support the growth of the economy and the sector overall. From the perspective of our strategy, we continue implementing our digital initiatives, already reaching 1 million retail customers with 1.1 million cards and 545,000 mobile banking users. 62% of our deposits and 51% of our loans are granted through mobile banking. In terms of financial performance, our return on equity for the third quarter was 17.9%. For the 9 months of 2023, return on equity was 18.5%. This was resulted on the back of the about 20% asset growth and 9% loan growth. Now we'll discuss all this in the next slides. Evgeny, please.
Thank you, Giorgi. Now, the macroeconomic highlights and country overview. So, as Giorgi has mentioned, the first half of 2023, the economy once again experienced a decline. The latest data shows the real GDP decline during the first half of negative 2.3%. This decline was primarily influenced by the shortfalls in wholesale and retail trade. Construction was another sector severely hit, and manufacturing. It was also recorded a 4.7% dip in private consumption. Exports have experienced a decline. We just got the most recent number, 8% down year on year in the first 9 months of 2023. However, this can be attributed to the abnormally high volume of exports in the first 9 months of 2022, which inflated the baseline comparison. Out of the range of most followed international forecasters, which are IMF, EBRD, Moldovan Ministry of Economy, World Bank, and Vienna Institute for International Economic Studies, we saw some upgrades, but the consensus is between 0 and 2% for 2023 economic growth, and between 3 and 4% for next year. So a good recovery on the books predicted by the top forecasters. On the next slide, again, as Giorgi mentioned, we saw a substantial decline in inflation, down to 6.5%, which is within the NBM targeted corridor. And NBM has responded by 7 straight decreases of base rate from 21.5% in November 2022 to 4.75 just earlier this month. This is expected to drive economic recovery going forward. And for MAIB, it has led to some most recently to some increase in lending as lower rates make loans more affordable. Moreover, the National Bank of Moldova has lowered the mandatory required reserves for deposits in both national currency and foreign currency. And this is expected to further stimulate economic performance. Now, as I alluded to, a decrease in inflation, it is now within NBM's corridor, and the factors influencing the decrease in inflation are lower energy prices, lower food prices, and of course, the high interest rates enacted by the National Bank of Moldova at the end of last year and the beginning of this year. In 2024, the NBM expects inflation at 4.5%. Next, we go to the performance of national currency, which has gained against key reference currencies during the quarter. This quarter is traditionally a very strong quarter for Moldovan lei because it is the quarter when a lot of the crops are exported and agricultural production makes up over 50% of Moldovan exports traditionally. And we've seen some strengths of Moldovan lei. At the same time, the foreign currency reserves of the National Bank have also increased to the highest level on record, nearly $5 billion. Another factor playing an important role here is Moldova continued receiving foreign assistance during the quarter, some European funds as well as IMF. Now, next, the evolution of the banking market. We have seen the lower rates starting to have an impact in terms of deposits, with deposits in the banking sector declining by 0.5% quarter on quarter, first such decline in over 5 quarters. And loans have seen a modest increase of 0.5%. MAIB's loan growth was 1.3% during the quarter, exceeding that of the market, and we will see that MAIB has gained market share in overall loan market up to 38.2% from 36.3% a year ago. Quite a substantial gain. This is attributable mostly to the strengths of MAIB brand and customer confidence in the bank. Now, next, we have the key events in the economy. 2 of them I have already described, which is inflation falling and easing of the monetary policy of the National Bank of Moldova. Economic recovery here. Another notable thing is that we've seen some positive signs in the inaugural business confidence survey by AmCham, with 74% of the managers expecting growth increase in 2024, and they are adjusting their expansion plans accordingly. Another very important development for the country has been the fact that the European Commission recommended that Moldova and the EU open accession negotiations. It took Moldova 1 year to reach accession negotiations. Again, this is the fastest on record. The decision is now with the European Council. We expect the vote to go through on the 14th, 15th of December. ratify. However, normally the European Commission recommendations are accepted. So this is a very important step forward for Moldova, and in the years to come, we expect that this will influence our economy and have impact on businesses and everyday lives. Now I will pass the mic back to Georgi to speak about MAIB's accomplishments against its set strategy during the quarter and the first 9 months of the year.
Yeah, thanks, Evgeny. Here on this slide, maybe a few things to highlight and stress. Number one, we have reached 1 million retail customers recently, quite a milestone in the country. We continue decreasing or optimizing our branch network and channels, now having 111 branches and agencies. You may remember our shareholder structure, 41% belonging to Heim Partners, with EBRD, Horizon Capital, and Invalda consisting with those. And we will speak about the financial results, but still want to highlight that our return on equity for the third quarter is 17.9%. If we move to the next slide, this is the slide about our strategy. We continue the transformation to become more future-proof digital banking institution with the focus on efficiency and, of course, sustainability. We have had a rapid improvement in our digital product and services, which we will be speaking. But one product to highlight, we recently launched a fully digital onboarding service where our customers can onboard with our state-of-the-art, I would say, face identification and verification function, which takes your picture and goes to the public registry and compares the picture to there, and if there is a match, then the onboarding will happen. From the perspective of agile and implementation of agile initiative, I'm very pleased to say that we are basically nearing the end here. Entire bank or the areas that are applicable already operates, most or vast majority of those areas already operates in agile mode, with retail SME having 1.5 years experience in this regard. We've developed the sustainability roadmap with the help of our international financial institutions. We published the first sustainability report in the country, and step by step we will be adding more and more initiatives in the sustainability area. With regards to IPO, and IPO clearly continues to be a strategic objective for MAIB. However, the legislation changes that needs to happen to make IPO practical is yet to happen. The timing of these changes is unfortunately uncertain, and so for the time being, we have paused the IPO work despite the significant interest from the investors. When the situation changes, we will keep the market appropriately updated. If we move on to the next, and I invite you to ask questions, if any, on the end of the presentation. The selected achievements through Q3 2023. You can see new backgrounds on our Zooms. This is our new office, which is pretty much state-of-the-art, open, transparent, in the agile with the state-of-the-art IT infrastructure, where we have started to move with the hybrid work mode, And this is the office where which will help to keep and attract the best talent in Moldova. You can see nice picture from the opening, Brett King giving the speech about Moldova 2050. We did have we had the honor to speak on Bucharest Stock Exchange event during the quarter, which in Bucharest, and also during this quarter we issued another bond in the country and successfully placed it among our retail investors. If we move on to the next page, and these are our achievements in terms of our mobile banking. And again, our growth for the mobile banking in the third quarter was 56%, reaching 545,000 mobile banking customers. We have significant growth in online payments. But I think two things perhaps to highlight, and which we are especially proud of, is the pace that we are increasing the percentage of online sales. And now in quarter 3 2023, 51% of all retail loans and 62% of all retail deposits were granted through mobile banking. If we move on to the next page, we continue developing the ecosystems, and for the next year we have the plan to launch our super app, which will connect or combine all our ecosystems or financial initiatives with one customer-centric, easy to use and navigate super app. So currently we target somewhere middle of the year. Depending on the work, it can change, but this is our vision on the super app as well. Next page. This is about the summary of the financial results, and then Makar will continue in more detail. I'm happy to report that our 9 months profit grew by 15.7%, reaching 987 million lei. And I think the especially important fact is that it happened on the decrease of our margins and rapid decrease of the interest rate. Our net interest margin is at 5.1% for 9 months and 4.2% on quarter 3. We do expect a slight more decrease in quarter 4, but then it will be only slight decrease, and we expect this to bottom out starting from quarter 4 this year. Cost to income on this due to the same reason did increase in 9 months to 49.9%, but quarter over quarter it decreased to 42.2%. And all this happens, or we continue having a very strong liquidity coverage ratio and capital adequacy ratios as well. Makar, please.
Yeah, thank you, Evgeny. So if you go to the next slide, let's a bit deep dive in our evolution from financial point of view. So in Q3, we continued solidifying our position both on asset sides and deposit sides, on the funding sides. As mentioned by Evgeny a bit earlier, we have the deposit sides overall slightly decreasing, -0.5, assets slightly increasing. But if you look at MAIB on the loan side, we have plus 1.5% quarter on quarter and plus 9% for a year on year. The main driver for the last quarter was increase in the retail portfolio on consumer and lending and mortgages, and that's also what you see as a proportion of retail and total portfolio increase from 33 to 35%. Of course, the rest of the legal entities stayed relatively flat, but overall we have increased and solidified our position. If you look on the deposit side, we have a strong leap, plus 6.1%. Or quarter on quarter, over 25% if you compare ourselves a year ago. A big part of that coming from the important corporate portfolio, which we manage actively and bringing more clients. All in all, our market share increasing. If you look on the loans, it's over 38%. If you look on the deposits, it's close to 34% of the market share. Now, if you go to the next slide, we see, as mentioned a bit earlier, we have a strong operating and financial performance, despite all the challenges which we are being facing, decreasing and the downward trend to net interest margins, with an inflation which we have been facing last year, which went down significantly to 6.3% now. We see that our net profit still has upward trend, 3.5% if you compare it quarterly on quarter 3 2022, and plus 4.2% if you compare a quarter ago this current year. And that again shows a strong performance and healthy business. Our operating income increased by around 1.7% quarter-on-quarter basis. And all this brings us to the ROE around 17.9% in the last quarter, slight increase 17.7% a quarter ago. Of course, despite the challenges which we are facing, we have slight decrease or decrease by around 3 percentage points if you compare to Q3 2022. Important to highlight also the equity have been increasing because of strong performance both in 2022 and year to date in 2023. If you go to the next slide, we are in the phase of monetary easing. As a result of all this, the net interest margins goes down from 5% in the quarter ago to 4.2% current or Q3 2023. Important to highlight, if you talk about the yields on loans and securities, yields on the loan side, let's say, they are less sensitive to the decrease. You see, we have in Q3 2022 is around 10%. Last Q2 was currently was 10.9% and now 10.6%. Of course, important hit from the decrease in the interest rates, overall level of interest rate, was from the securities, which went down from 13.4% a year ago to slightly above 10% or 10.2% this year. Also important to highlight that you see here that we see important decrease of the cost of funding, especially driven by cost of deposits. In Q3, it's 4.1, and that trend of decrease, significant, important decrease of the cost of funding, we expect also in the coming quarter. And of course, if you talk about assets or loan side, the repricing is more often, or let's say quarterly or semi-annually basis for important products of ours, like let's say mortgages, and cost of funding we have more mainly on the yearly basis. So we expect the gap or the net interest income still decrease in Q4, but then it will stabilize and even increase. Now, if you go to the next slide and talk about non-interest income, as a result of all the strategic initiatives, all the focus which have been doing on the payments, on the digital and so on, we see also here that non-interest income has seen important increase, over 30% in the last quarter alone and over 7% compared to Q3 2022. Now, the main driver for the last quarter was compared to the Q2 was from Forex, because as also Evgeny mentioned, Q3 is characterized by important inflow of Moldavians coming back home and spending money. So we have important increase of the kind of inflow of the cash of foreign currency and also impact of our Forex. At the same time, what you see here, our net interest income has a stable and month by month improvement on the performance, like 4% increase net fees and commissions income versus last year, or quarter, similar quarter of last year, and over 14% of the last quarter. So we see a strong and healthy performance of our non-interest business, be it on the Forex side, be it on the net fees and commissions side. Now, if we move to the cost-income ratio, here, of course, our focus in the decreasing inflation environment, or lower and lower inflation, lower interest rate environment, is to ensure that our operating income are increasing or have a better performance than operating expenses. And what we want to highlight here, a couple of things. Despite the hit of the prices which we have been facing in 2022 and at the beginning of 2023, we managed to increase our operating expenses slightly by 0.3% only if we compare to Q2 2022, and even decreased if compared to the current year. And as a result of this performance, what we see, of course, compared to the Q3 2022, our cost income deteriorated by around 6.1 percentage point. But if you compare ourselves to the quarter ago, it's slightly improved. We expect that's a level where of the performance, like the slightly lower 50, around 50% to be also performance overall. Given again all the challenges, is a strong, good focus and management of operating expenses, be it on the depreciation, personal expenses, or other operating expenses. Now, if you look on the next slide, on the quality, again, we have been facing important slowdown in economic activity, minus 5.9 last year, minus 2.3 first half of the year. And all again, despite all this, our NPL is strong, good. It's downward trends 3.1% compared to the quarter ago, a slight deterioration compared to a year ago. Now, improvement of the last quarter comes from important recoveries of some of our important corporate clients, which we are being focusing on. Now, if you look on the cost of risk, it's slightly increased to 0.3%, and it again shows kind of the healthy portfolio with NPL coverage ratio significantly above 140, 150%, 56% on the 30th of September 2023. So it's a stable, healthy growth, which we have seen for the last years and months. And now, if you go on to the last slide on the financial performance, you see that our, as mentioned a bit earlier by Georgi, we have a strong liquid bank with the liquidity ratio over significantly over the minimum of 100%. We have 246% on September 23. On 30th of June, it was close to 50%. It's stable around 250%. On capital adequacy ratio, it's 23%, slight decrease from because of the prudential differences and versus FRS, and also the allowance for the intangible assets. But again, it's like significantly above the minimum requirements of 16.9%. The same situation, Tier 1, is 14% minimum, but we have 21.1%. So well-capitalized liquid bank with a strong financial performance and healthy portfolio growth, better than in the market. Thank you.
Thank you, Makar and Georgi. We will now take any questions, if there are any. Feel free to ask them on chat, or you can raise your hand and we will allow you to speak. Now I can see there's one question from Alex. As was mentioned earlier, the LCR calculation methodology was revised. Please provide the September 22, December 22 values of the LCR based on a new methodology. Makar, maybe you take this, or
maybe you take it.
Yeah, so I think indeed what we did, we reviewed the approach, we calculated LCR and made it even more prudent. Again, we are significantly above the limits, and like it was 80% till December of last year, it's 100% now. It's around 200. So the figures which you see now, these are compared on the new refined methodology and refined approach for both June and September.
Okay, one more question. How far was the refined comparing with the old? So I guess this is the question about what was the revised value, but on a comparable quarter and basis points.
Yeah, if you drop email, I can send exact numbers, but it was around 60-70%. It was over 340% compared to the old methodology, let's say, and now we have 247%. And what's important to highlight, these numbers are audited by the top 4 audit company, world audit companies. So that's also kind of gives us confidence that this above the minimum 100% significantly audited numbers of 247 in June, and 246. Again, if you talk about the delta, it's around 70 percentage points.
Thank you, Makar. Now,
again, if you drop email, happy to follow up.
Yeah.
This number is audited.
Yes.
Already. So the previous number was not audited.
Exactly. The numbers which you see here are audited by Big Four companies.
Another question on chat. What are the relations of MAIB management with NBM? It looks like the initiatives to change legislation to open the possibility of the IPO are not supported by the regulator, as well as the inability to promote dividend policy that will match MAIB's performance. Also seems to be the lack of proper communication with the NBM.
So I think from the perspective of relationship, it's quite professional and technical matters focused, and we continue working with NBM as our regulator, and we do respect their decision. And NBM has their own arguments related to specific initiative of the law. We did pay dividends this year about 1.9 lei per share. We continue basically good performance and focus on the dividend payment for next year with a very strong capital base, which we showed. One thing to highlight perhaps is that the macro situation and the global geopolitical situation, of course, are not very supportive for our dividend story if you were in NBM shoes. Not to try to defend anyone, of course.
Yes, indeed, and we saw that in Romania this year, their central bank decided not to allow payment of the dividends. Thanks. Please mention the audited ratio of LCR. So I guess we will have to respond in an email, Alex. It just goes back to the LCR ratio. Please write us an email and we will respond. Thank you. Opportunity for more questions. If there are none, then we thank the spectators for following our performance. Please tune in next time. Thanks, Makar. Thanks, Georgi. Thanks the finance team who prepared the quarterly report. And we hope to see you next time. Thank you.
Thank you.